Alright, what's good, boys? Trade log episode 2. I did not take any trades today just because of the high impact news on a Monday. People do trade high impact news Mondays and don't like trading no news Mondays, whereas no news Monday and very high impact news Monday is, for me, it's just a no-go. Just because you can clearly see here, we're on a 5-minute time frame, we have a candle wick this fucking big. I want to, hang on, even on the 1 minute, see a gap when news hit, a big gap in the market, and then straight back down. Well, the news is just an injection of volatility. So this wick was probably, yeah. No, let's clear the charts. This wick was to come up and take out this level of a buy side liquidity. So it came up, wicked them out. So all the retail traders placing their buy orders at these highs, they would have been entered, and for everyone in a sell, say like a swing trade in a sell, they would have gotten stopped out. So their stop would most likely, it will look something, I don't swing trade, so I haven't got a fucking clue, but it will look something like this. So you see, the news came up, whipped them out, and then with that injection of volatility plus the liquidity, you can then proceed to dump. I don't like trading the high impact news, and if you're wondering how to look at the high impact news, come over to Forex Factory, forexfactory.com, and you can see. We go on today's, we had all day the euro currency CPI, and the main news, major news that you should be avoiding is CPI, PMI, non-farm, any sort of like non-farm payroll or anything like that, FOMC, and bank holidays. I believe they are the major ones to and unemployment claims. They're the news events that if you come off Forex Factory and you see that they're affecting the currencies that you are trading, then it's best to just like call it a day. There's always going to be trades tomorrow. There's always going to be other opportunities. But yours won't look like this if it's the first time going on Forex Factory. So what you'd have to do is yours will look like this. There's shit ton of news and all these yellow folders which don't really affect the market that much. They're yellow. So the best thing to do is, and it'll be with all the currencies, is to take off the yellow, keep the grey, orange and red. Orange and red are the impact news which are most likely to increase like the volatility of the market, whereas the grey one is just the bank holidays. So you don't trade on bank holidays because the banks aren't fucking open. Take off is all your currency pairs. So for me, I trade Great British Pound, US Dollar, Euro, and Japanese Yen. So all these other ones, I can just take off because I don't trade them. Apply filter. It's a lot smaller, a lot more manageable. And you can have a look at the news events. So all day, this is the time. This is the currency. This is what's going on at that time for this pair. If you want to have a look, I wouldn't really bother, especially for like CPI and everything, because this news, like the usual effect, actual greater than forecast is good for the currency. So see, actual was less than for the forecast, so it should be bad for the currency, right? So it's bad for the euro when compared to the US dollar. So it would mean it will come up. And what time did that come out? Let me play this shit. Time did that come out? Oh no, it's all day. Wow, that wasn't a very good example. Let's have a look. Let's have a look at this PMI. US dollar PMI, 3 p.m. Actual, greater than forecast, good for currency. Actual, less than forecast, bad for currency. So bad for currency, if I'm trading against the euro against the US dollar, if it's bad for the currency, and the pound will therefore be greater. So in theory, it should come up, but you'll come to see the more you have a look at the news and the time and how it affects it, it doesn't always correlate. So yeah, this is great for the Great British Pound compared to the US dollar, but it might still come on down. All news does is have a inject the market with volatility, which is, and it makes it unpredictable, and that's when it becomes gambling. So you see this fat gap. See this fat old gap. I think my face cam just died. I believe it has. The show will go on. So this fat old gap here that we're filling in, but this isn't a lesson. This is a trade recap, which I did not take. So come 3 o'clock, you see the big candle, big injection of volatility. All right, wait, right here. Yeah, that's not very good for the. If you're a day trader, you want precise. You want to, predict. But you can't predict the news. You don't know what's going to come out. So that's when it comes to gambling, which is why it's best to just stay away from them 6 when they come out, because you can't really predict it. It is a 50-50 chance whether you're going to get stopped out or, you're going to hit your take profit. But chances are, if you're going to get filled, say with this news event, say you placed an order, a limit order, up here, right, and you place your stop down here. When news came out, turn the mic off. When news came out, yeah, sweet, you hit your order. You're in profit for a bit. Then literally, in the matter of seconds, it would have come on down, hit your stop loss. And there you go. You see, this is on the 1 minute time frame. So when price was here, you set your buy limit, say even here. And you were targeting this level of buy side liquidity. Up here. You wouldn't have gotten your take profit or anything. You would have just entered the market from this injection, gotten filled somewhere within this candle, not hit your take profit, and then come on crashing down, and you would have lost your money. It's pointless trying to gamble against news because you don't know what's going to happen. You don't know how it's going to affect it. You don't know which way it's going to go. You don't know. And when you're uncertain, especially when it comes to trading, if you're not 100%, then it's best to just leave it. Let it play out. Well, don't take the trade, mark it out, see what would have happened, and then learn from it. Because on high impact news like this, it's pointless trying to guess, because you could literally flip a coin, buy or sell. It's fairly unpredictable. And prior to the news coming out, it's not really a whole lot of action going on that you could really catch. You see, it's kind of moving sideways, going up very slowly. Injection, come on down. Injection, come on down. Really slow. Injection, come on down. It isn't like the high impact news. Got to watch out for, because if you're in a trade, you didn't check news, and you've got an A+ setup. You got a liquidity sweep. It's in a discounted zone. You got a clear market structure shift with leaving behind a fair value gap that you enter off of. And then you're chilling. You're running through profit. Then all of a sudden, news comes out. Bang! You're done. You're sorted. And when it comes to the news, it happens so quickly. If it was to run and hit your stop loss and keep on going, then it might take a while for the servers and the MetaTrader to actually realize that, oh shit, your stop loss was hit. It couldn't have processed your order quick enough. So instead of your stop loss say you entered off of here. Wrong way. So you entered off of here, targeting this buy side, and you've got a pretty tight stop. Say the stop was only, you know, this whole bit was probably like only £200. Since it happened so quick, there was a chance that you would have gotten exited, say like down here. So instead of your stop loss getting hit here, it might have triggered down here. So instead of losing the £200, you could have lost like £600, or however much you're risking at the time. And with funded accounts, if you're wanting to trade, most brokers don't let you trade high impact news because it is 50-50 of the volatility. But if your stop loss gets hit and not triggered, and then comes crashing on down, you could lose the account just from placing one trade. You could blow the whole account, and then you could have, you know, you're right back to basically where you fucking started. You got to buy an account, you got to work your ass off, buy another account, just to end up, you know, fucking gambling on news because you don't have the discipline to just, you know what, leave it for today. There's always opportunities tomorrow. If you didn't think like that, you got greedy, you wanted to take the trade, you thought, oh yeah, high impact news, yeah, it's definitely going up. Nah. Gone up, come down. That's the thing with most of these high impact news is it will shoot either up or down in one direction, but then soon after it will come crashing on back, or it will just continue. You see, it's completely unpredictable and not good to trade. So yeah, high impact news today. Didn't take any trades. No trades today. What's the news for tomorrow, actually, whilst we're here? Tomorrow, CPI. Chair Powell speaks. And you don't want to be fucking with Chair Powell. No one ever fucks with Chair Powell. Fucking Daddy Powell coming in. He says one word, completely fucks up the market. So if you're actually interested in getting into day trade, have a look tomorrow at half past 2 UK time at the market. Just mark it out on the charts and see what happens when Powell speaks. And same with this CPI come 10 a.m. I'll look at the CPI, see what happens to the market. It's going to go either one way or the other. Leave a long ass wick, and it's very unpredictable. It's better to just not trade. And I think that's going to be the case for tomorrow as well, because London session opens 8 a.m. Yeah, okay, this news comes out at 10 a.m. So when market opens, there's 2 hours until this news comes out. But when it comes to the markets, say this, let's have a look at this. 2:45, let's have a look. So, where was 2:45? Right here. I've got a 5-minute chart. See leading to the news? It's not necessarily the cleanest of price action ever. See, it's going to be on this pair as well. Let's have a look. You see, news came up, wicked out this buy side liquidity, and then just immediately dropped. That long ass wick on the 5-minute candle. The 1 minute. Massive wick. And then it leaves a fucking gap. It's not good to trade when it comes to this. What was my point? Oh yeah, prior to the news. Let's have a look. 2:45 is here. See all this? All this consolidation literally spans from, oh, what the fuck is this? You know? This was Sunday night. You'd never trade Sunday night. You see how choppy it is? And then for me, market open right here. Boom. Was there any trades to take? Do you see any trades to take in this fucking mess of accumulation? It's best to just stay away from it. High impact news, prior to the high impact news, Just a whole lot of chop, whole lot of consolidation. Yeah, okay, there's a sweep of liquidity. There's market structure shift here. There was no fair value gap filled. It just kept rising and rising. Big gap. And came up, taking out this buy side liquidity. All the way up here. See? No opportunities. Just because the markets are so shitty and choppy when it comes to high impact news. Prior to the high impact news, a whole lot of chop. So it's just best to just avoid it completely. Yeah. And then I'll do a little lesson, just a bit of free sauce. Don't trade high impact news. And prior to the high impact news, have a look at the markets. It's most likely choppy. Try and avoid the red folder news. Orange folder, say if it's just one orange folder, I will typically trade, but you know, since PMI, CPI, you want to be careful. CPI, PMI, non-farm, unemployment claims, bank holiday, and FOMC. Those are the news events you want to ignore. So yeah, I think that'll be all. I think that shall be all. It's a smiley face. Alright. Good shit, Joe. Good shit. And a bear.